What is up? What is up? We are back with video 4, I think. Video 4 in this advanced market structure series, PDF series. Let's see what example we got. We went over AUD CAD 4 hour. We got AUD CAD at 4 hour again. So AUD CAD on the 4 hour again. What do we see on this time frame, right? So it's looking like the higher time frame is bearish, right? We see a break of structure to the downside here. From this high to this low now is our range, right? And our supply zone would be where that structure had gotten broken, right here, okay? We see also this minor shift in market structure, even though structure was already bearish, but you know what I'm saying. So we're going to drop down to a lower time frame in this area here. On the 15-minute, oh wow, this is such a juicy, clean setup. This is ideally, I wish every setup would look like this. I wish every setup could look like this. So right here, we see this line is our 4 hour point of interest, right? So we got a rejection from that, right? Here's our initial rejection. Did it give us a break of structure? Did this low give us a break of structure? No, it didn't. So what do we see after that? Did this high here give us a higher high than this? No. Did this high give us a new low? Yeah, it did. So now we got our confirmation, right? We got our confirmed direction that now we can sell from this supply zone, this 4 hour point of interest, right? So as price moves back up there, right, we take an entry off of our 15-minute point of interest, okay? And stop loss above the high. Beautiful, uh, beautiful risk to reward on this trade using a 4 hour point of interest and a 15-minute structure. Very nice. We got AUD CHF now on the 4 hour. So what do we see? See a shift in market structure, right? Right here, and a break of structure to the upside, right? So we see, let me look at this. Okay, yeah. So we get initial rejection right here, but let's say we missed this entry and we saw another break of structure to the upside, right? Get a new higher high because this high is higher than the previous high. So we would wait for price to come back into this demand zone, and we can see on the lower time frame where we can take our entry. And this one's pretty basic actually, right? So we go from the 4 hour, we drop down to the 1 hour. And this is what we see, right? So we see a little stop hunt, right? From this last move down, and then a strong impulse to the upside, right? Breaking structure. You see this whole move up breaks this structure. And price quickly actually comes back down into that demand zone. And that's a good indication too. Maybe this was news that pushed price back down into that area. That's a possibility. Um, but this would be our entry from this example here. And you can see on the 4 hour already too, there was this 4 hour bullish order block as well. And that's the reason why it was buying. Next example, we have AUD CHF on the 15-minute. AUD CHF on the 15-minute time frame. And wow, this is another one of my favorite setups. They're so clean. So what do we see? As far well, before this, before my circle, what do we see, right? We see bullish order flow, right? Price is breaking highs and retesting, excuse me, well, yeah, retesting, but the word I was looking for is respecting um, demand zone, right? Respecting demand areas. And so, yeah, bullish order flow is being respected. But what happens here at this circle? We have highs, we have liquidity, right? And price shoots above these highs and aggressively um, trades in the opposite direction, right? So price moves above these highs and aggressively trades in the opposite direction. So this is giving us an indication of two things, right? One, um, liquidity has been taken out, liquidity, and then two, direction, right? Direction. So this is giving us an indication of two things. So now we wait for price to get back up into this supply zone for an entry. So here is our initial, like our initial rejection, right? From that break of structure. And from from this rejection here, we get another minor break of structure. You see this long down move. So after that, that's when we could go to the lower time frames and watch, watch this retracement back up into this 15-minute point of interest. So we go from the 15-minute time frame to the 5-minute time frame. And now you can see that break of structure a lot easier right here. Here's that initial rejection from the first break of structure. And the second break of structure, see, here was the first one. Here is the second. Well, the second right here gives us another break of structure, right? This rejection here gives us a break of structure. And we look back into those supply zones. And what do we see, right? So you remember this over here, or this right here, the behavior of how the market was, right? So look right here. Zoom in a little bit for you guys. So look right here. The same exact behavior on a different time frame. Do you see this move right here? You see this push up right here, took out this high, right? And you can see BSL, that's buy side liquidity, right? Just liquidity. Okay. So it took out buy side liquidity and then does what? Gives us a break of structure. So we are looking back at this supply zone for any entries, right, on the 5-minute time frame in line with what our 15-minute time frame direction was, right? So yeah, your entry would be here and targets would be at lows, right? They would be at lows. So, and most likely on trades, you're not going to have 4 TPs unless, well, I don't know, unless, but most likely you'll have 1 or 2, right? But I think that's going to end it here on this video. And I will catch you guys in the next one. Peace out.